There are many activity being undertaken in society: personal activity, social activity, family activity, business activity, etc. You are born, go to school, engage in marriage, attend social function, and engage in job, some business as part of life. All these activity are regulated by social custom, tradition, culture, government. Some people undertake business as their living source, and conducting business involve utilization of country resources to produce some valuable marketable output. Since the country resources are scarce, business activity are regulated by government and its entity. Government activity, business owner, society are interested to understand about your business results for various purpose, and you are required to keep account of your business transaction and event easily understandable by everyone. In this context, every business entity publish mainly 3 types of report. In business language, these reports are named a statement of financial position, balance sheet, statement of profit, loss, and statement of cash flow. All business are required to publish this report in standard framework so that it is easily understood by everyone. A balance sheet shows a company's financial position at the end of an accounting period, listing what it owns, assets, what it owes, liabilities, and what belongs to owners, equity. A profit and loss statement, P&L, summarizes revenues and expenses during that accounting period to reveal whether the business made a profit or loss. A cash flow statement tracks the actual inflow and outflow of cash under 3 sections: operating, investing, and financing activities, showing how money moved in reality. These 3 statements together give a full picture. The balance sheet shows what exists, the P&L shows how it performed, and the cash flow shows where cash went. Let's understand in simple language the meaning of balance sheet, profit and loss, and cash flow statement. Imagine a farmer Harry having 1 acre of land and is involved in farming activity. He produces rice grain, wheat grain from the land with the help of his family. He used land, seed, fertilizer, water facility to cultivate rice, wheat. He used plow, shovel in land to produce rice, wheat from seed. The land was initially bought by him for Rupee 1 lakh and he had some Rupee 20,000 left. He used 10,000 to buy seed, fertilizer, plow from Tom and is left with 10,000 cash. Cost of seed, fertilizer, plow, shovel was Rupee 15,000 and he has remaining Rupee 5,000 to pay to Tom. After 3 months, rice, wheat of 100 kilograms were grown in his field and he sold 70 kilograms of rice, wheat to Donald for Rupee 35,000 and is left with 30 kilograms. As you see, Harry has undertaken many activity which are called transaction in business language. All this activity, transaction, involve the money and he has to keep record in monetary form. Harry will keep record of this transaction and will be interested to know his financial status, financial performance and his cash position to plan his farming activity for future. The repeated income and expense activity are reported in profit and loss statement. It is nothing but a record of activity, transaction done by him, income and expense generating activity, for certain fixed period like 1 season, and all such activity impact him for 1 season. He will be in profit or loss for that 1 season and end result of profit or loss will also be transferred to another report called balance sheet. So, balance sheet is nothing but a cumulative status of all past activity done by Harry for his farming business. But we should keep in mind that some activity affecting Harry farming business in long term are to be recorded in balance sheet directly instead of profit and loss, like purchasing land. Question may arise why we need to record such activity like purchasing land in balance sheet. It is because Harry will not gain immediately from purchase of land in 1 season or 1 year. He will also gain from land in future. He will cultivate seed again in land in next season and cultivate rice, grain. From above explanation and example we can understand that business have initial capital contribution from business owner, asset purchased from such capital, liability generated from business. The first step of introduction of capital and purchase of land is reflected in financial statement as presented in slide. Introduction of capital is shown as share capital and purchase of land is shown as non-current asset with cash remaining shown in current asset. We can also see that there is only cash flow from financing and investing activity in cash flow statement, as there has been no any business activity incurred impacting the profit and loss statement till now. The impact of purchase of raw material is impacting the profit and loss statement is cost of sales section, and the cash impact of this activity can also be understood through cash flow from operating activity in cash flow statement. The cash flow from operating activity is negative as business product is not sold yet. Similarly, the impact of cost of sale and subsequent net profit loss is reflected in retained earnings section of balance sheet. With sale of final product and receipt of cash, it is impacting the revenue head and net profit and loss head of profit and loss statement and cash flow from operating activity section of cash flow statement. Had the business not sold the all 70 kilograms of final product in cash, there would be trade receivable amount shown in current asset of balance sheet. The matching principle ensures the financial cause and effect are reported in the same profit and loss period. Without it, a company could look artificially profitable 1 month, recording revenue, delaying the expense, and then unnecessarily unprofitable the next, recording a huge old expense against little new revenue. So, we have added unsold inventory in profit and loss and shown the impact of same under inventory in current asset of balance sheet. In this example, owner of business is Harry, nature of business is farming, business product is rice and wheat grain, which are sold and generate revenue for owner Harry. Revenue is amount obtained after selling final business product rice and wheat grain. Cost of material are seed and fertilizer, which get converted into final business product rice and wheat grain. Labor cost is amount paid by Harry to his family member. Other costs like water are direct expense without which it was impossible to generate final product. All these cost of material, labor cost, and other direct expense are reported as cost of sales in profit and loss, and difference of revenue and cost of sales is called gross profit and loss. There are some other indirect costs too, which are not involved directly in producing final business product but are necessary to support the operation of business, in this case farming operation. Example of such cost are caretaker of land to see that no bird destroy the crop. This cost are reduced from gross profit loss to obtain net profit loss of business. Capital contributed by Harry is called share capital and is Rupee 1 lakh amount transferred from profit and loss at the end is called retained earning, which can be distributed to owner. Asset purchased having useful life of more than 1 year and providing benefit to business for more than 1 year like land are classified as non-current assets. Asset purchased to be used for producing final product but not sold yet like unsold rice, wheat grain are called inventory and classified as current asset. Amount remaining to be paid to party and liability for payment obligation extending for more than 1 year are payable and classified as non-current liability. E.g. amount remaining to be paid for purchase of land if any and to be paid in next 3 years. In this example, non-current liability is 0. Amount remaining to be paid to party and liability for payment obligation existing within next 12 months are trade payable and classified as current liability. E.g. amount remaining to be paid to supplier Tom. So, balance sheet is nothing but a report showing the sources of fund like capital, liability and utilization of such fund in assets. A good business always utilize capital and non-current liability for purchase of non-current asset and some part of capital and current liability for utilization in current asset. To help the business owner to take decision regarding obtaining source of fund and utilizing such fund, business also publish one report of cash position which is called cash flow statement. In cash flow statement, business bifurcate the cash generated from business in 3 categories. The cash generated from business activity like purchasing seed, incurring direct expense for producing final product like rice, wheat grain, and selling them are categorized as cash flow from operating activity. The cash receipt or paid from owner or lender are categorized as cash flow from financing activity. The cash receipt or paid from selling or buying the non-current asset, investment asset, etc. are categorized as investing activity. A good business has always cash flow from operating activity positive.